Hey guys, it's Angie. So today I'm going to talk to you about something that every reseller has to face eventually, and that is paying taxes. This could be a lengthy conversation, so grab a drink and let's sit down and have a chat. Okay, so first and foremost, I want to say that this is from my personal experience as an eBay reseller for over 20 years. But I am not a tax accountant, and therefore you should not count this as legal or financial advice. Every situation is different, so make sure you talk to a tax professional to get your specific advice. But I have a lot of useful information in here that will help just about everyone. Okay, the number one question I get is, do I have to claim the money that I make on eBay? You're here watching this video, I bet you the answer is yes. The only exception to paying taxes for eBay items is if you are using it as a garage sale, just as if you were selling at your house. If you're only taking your personal items that you paid close to retail price for and are selling them after you no longer use them, that would be all items that you're probably selling at a loss. Now, the IRS doesn't want you taking losses on your personal items, so they would say that that is not a business. That is just you reselling your items you already had. But if you buy anything at all for less and with the intention of reselling it for a profit, you, my friend, are a reseller, and that money is taxable. Now, the other question I get is, I don't get a 1099 because I don't quite make that 20,000 threshold, or I sell on Poshmark, and last I knew Poshmark didn't send statements. That could have changed, but I'm not a Poshmark seller. And the answer is also yes, you're supposed to file and claim that money. Just because the IRS wasn't notified by eBay or PayPal or Poshmark that you made money, you still did. So you're always at risk of having an audit if you don't claim the money. So it's just best to start from the beginning, pay your taxes, and then you won't have to worry about it. So you get a 1099 from eBay or from PayPal, and on there it says your gross sales or the gross receipts that they had. Does that mean that you have to pay taxes on all of that money? No, of course not. That money is everything that they received, and that means the amount of money people paid for the item, the amount they paid for shipping, and the amount they paid for sales tax, even if you didn't get that sales tax, that eBay remitted that sales tax for you, that money will also be listed on there. So don't fear. We have a lot of ways for you to deduct all that money to make that big dollar sign that you see on your 1099 go down. So the first thing that you're going to do is, let's talk about what is easily deductible. And number one, you're going to look at your eBay reports and you can deduct all of the shipping that you paid, all of your eBay fees, including promoted listing fees and your monthly store expense, and also any sales tax that eBay paid on your behalf. They'll also be listed in their reports. On top of that, you also can deduct the cost of how much you paid for the item. That equals your net sales. Now, does that mean you have to pay taxes on that amount? Nope, not that one either. Luckily, there are tons and tons of business expenses that you can deduct just from being your own boss. And you may wonder, am I really my own boss if I'm selling on eBay from home? Absolutely. Anybody who is taking the time to purchase items and reselling them is their own boss. Whether you do it part-time or full-time, everyone starts somewhere, and you, my friend, are a business owner. So let's talk about some of the deductions that you can make from being your own business owner. Now, the number one item that you can take is the cost of your inventory. Your cost of goods sold are just that, the price that you paid for the items that you sold. Now, you do need to have some way of letting the IRS know how much you paid for items. Now, if you go to thrift stores or the Goodwill bins, make sure you're keeping a copy of all of those receipts. The other question I get a lot is, I pay cash at yard sales. How in the world can I account for that? Now, the IRS would prefer that you take a receipt book to every yard sale, write down everything you purchased, the name of the person you purchased from, and their address, and have them sign it. let's face it, that's probably not going to happen. So the best thing you can do is just have a notebook. I don't know about you, but not many people really want to sign a receipt for you at a yard sale. And besides that, you might not want every single yard sale to know that you're a reseller. So that kind of defeats the purpose. So what I personally do is I have a notebook and I start with the date at the top of it for every day that I go yard sailing. And at each one, I just kind of write a general idea of what I purchased and how much I paid. And that way I keep track of it that way. And I keep that notebook all year long. And I think that would be just fine. The IRS just wants to see that you're consistently keeping track, so you're not writing off anything that seems not logical or in line with what you do every day. So pretty easy. Where I lose a lot of people and where the questions start coming up is beyond what you buy for reselling, what else can you deduct? Well, there are lots and lots of things. The thing that I spend the most on are shipping supplies. So if you buy poly mailers or boxes, shipping tape, bubble wrap, packing paper, all of that is 100% deductible. So that number will come off of that net sales that I told you about. So already you're paying less taxes because of all of those items that you bought. Now you can also deduct toner ink, printer paper, labels if you use those, pens, staplers, post-it notes, anything that you use in your business that's a disposable item like that, all of those are deductible as well. Then there's another area that's called equipment. Now, equipment is not the same as a supply, an office supply, in that equipment is something that you don't use up. Now, of course, eventually things become outdated and you could replace them, but it's not something that you use, and once you use it, it's over, like printer paper. So kind of a list of things that you could consider equipment would be a computer monitor, a new printer, including like a Rollo printer that are the new rage. I have one of those. A desk chair or a new desk. All of those things are office equipment. Also things like a new camera or a GoPro if you're taking pictures on a GoPro, your lighting system, or even a backdrop that you use for your picture taking. All of those are equipment and all of those things are deductible. So make sure you keep your receipts and you can deduct those at the end of the year. Now don't freak out if you don't have the receipt. Luckily, we live in an internet-based world. So most likely you purchased a lot of the items online or at stores that you can still get your receipts online. So if you don't have your receipt at the end of the year, go back to Best Buy, Office Depot, Amazon, Walmart. Most of your purchases are listed not only for this year, but for years past. So you can actually find those items really super quickly. And that includes for all your supplies and things too. So don't be afraid to look back and find your receipts that way. Another item that is a great business expense is your telephone bill. So if you have a cell phone that you use for business, if you're out using it to look up how much items are, to check your eBay, you can deduct this as a business expense. Now, unless you're using it 100% for business, you can only deduct a portion of it, sadly. So what I do, rather than try to figure, do I use 70% or is it only 30%? I go with the average, which is 50%. I've never had a problem with the IRS taking 50% of my phone as a deduction. The other item that you can deduct easily is your internet bill. Now, if you use internet specifically for your business, again, you could take 100%, but if you're like most of us and have a home office, then that is going to be the percentage that you use for business versus what you use for personal. Again, I do the 50% rule, and that seems to work out just fine for me. Another thing you might run into are dues and subscriptions. Now you're probably thinking, what in the world would I even have that's that? But you'd be surprised, you may have a few. If you subscribe to List Perfectly, have a GoDaddy account, have a Canva account, or use a filming program like Filmora 9, all of those would be dues and subscriptions. So you can deduct all of those 100% for your business. Another area is advertising. Now, as eBay sellers, we don't have a whole lot of advertising, but you might have bought business cards or thank you notes with your business information on it, and if so, those are all advertising expenses, 100% deduction. Have you ever purchased one of those training programs like Rally Roots has a training program as well as a bunch of other people? Well, all of those are considered training, and those online classes are also 100% deductible for your business. So if you are into self-improvement or learning more about your business and you find a program that you're interested in, remember to keep your receipt because you can deduct that. So another question I get is, can I deduct using my personal vehicle for business? And the answer is absolutely. So you can do it one of two ways. The first way is to keep track of your mileage. For 2020, the mileage rate was 57.5 cents per mile. Where the IRS comes up with that, I don't know. But you can deduct every mile that you drive for your business. Now, because you're a reseller who works from home, you may not think that you do business traveling in your vehicle, but actually you do a lot. Every time you go to Office Depot or buy any supplies, that round trip is deductible. If you go to the post office, those miles are all deductible. Even if you go yard sailing and thrift storing and you travel all around and you buy nothing at all, you still can deduct every mile that you are out there sourcing. That's all a part of your business. So what I do is I keep a little notebook in my car that just logs the miles when I go somewhere. Okay, now don't freak out if last year you didn't do your mileage and now here it is, almost time to do the taxes. One year when I had not done that, I had to recreate my mileage log. So what I did is I had receipts from every day that I went to a thrift store, every time I purchased anything, or anytime I went to the post office, I had receipts for all of that. So I just went on Google Maps and figured out the round trip distance between the post office, certain stores, and then I just recreated a mileage log. It's not that hard and it doesn't have to be super detailed, but if you could just show these dates you went to the post office and you'll figure out the mileage, it's actually pretty simple to recreate that. If you have any questions, please let me know. The other option for you, if you don't want to do the mileage, is you can do the actual expenses, which includes all of your gas receipts, maintenance on your car, new tires, your registration, your insurance, even depreciation on your car. Now, one thing a lot of people don't understand is you can't take both. If you do the mileage expense, you can't take the gas receipts and all of those other items expense. It's one or the other. The thing with using actual expenses is you have to figure out how much of your car use is personal use, again, versus business use. So that's something you have to figure out as well in order to be able to use actual expenses as a deduction. I just find for me it's easier with the mileage, but you do what works best for you. I think the most confusing deduction for resellers is your home office expense. If you have a home office that is dedicated space just for your business, or you have, say, garage space that is literally just used for your business, you can deduct the bills for that part of your house. So to do a home office deduction, the first thing you're going to have to find out is, how big is your house? Now, you may not know, and you don't have to go around with a tape measure to try to figure it out. Most places in most cities, you can go on your tax records online and find out the size of your house. That's the first thing you're going to need. Even if you are renting your house, you can go on the tax record and usually look up your address and it will show how many square feet your home is. The second number you're going to need, and at this time you are going to need to get that tape measure out, is your actual home office space. You want to measure that out and say you just have a room, an extra bedroom that is now your office, and it is 10 foot by 20 foot. That means that space is 200 square feet, 10 by 20. If your home is 2,000 square feet, we'll just make it easy numbers, and your home office is 200 square feet, that means 10% of your home's bills can be deducted as business expenses. Pretty cool, right? So that includes your mortgage or your rent, your homeowner's insurance, and all your utilities like electric, gas, water, sewer, garbage. All of those things you can deduct. And with this example, it would be 10%. Mine actually ends up being about 22%. What I do is I keep a log all year long of all of my bills, including my insurance and my utilities. And I come to totals for the end of the year, and then my 22%, or whatever your percent of home office is, that I take off at the bottom, and those are my expenses that I conduct. Easy peasy. And I want to let you know about a few other deductions that you might run into. One is travel and meals. Another question I get is, can I take a personal vacation with my family and make it business related and deduct it all? Probably not. But say you attend the Posh Fest and you're going there obviously for business because you're a Poshmark seller. That actually is something you can deduct. Now, if your family is going and they're just going to hang out by the pool, sadly you can't claim any of their travel. They're just there on vacation. But you can claim your travel expenses, including your hotel, your airfare, your cost of entering any events and things like that are business related. All of those things can be deducted. When you're traveling, you can also deduct your meals, not for your whole family, just for you. The one thing that you cannot do anymore is entertainment. Businesses used to be able to deduct taking people out to strip clubs and other things like that. Well, the IRS put their foot down and said no more. So you can't go parasailing on the IRS's dime or go see dolphins, snorkeling, take a scuba class, or anything like that. So all the fun parts of your vacation, sadly, can't deduct any of those. But all the meetings and things like that, you definitely can deduct. So as far as meals go, when you're in town doing work for your business, you can't deduct going through drive-thrus or going to Starbucks, wah wah, sadly. But if you have a meeting with another reseller and you're having a lunch meeting and you discuss business, you can deduct 50% of that meal as a business expense. So make sure you keep your receipts. The other thing is if you donate. Another great thing that you can do is when you have old inventory that just is not selling, you can actually donate that back to another thrift store and get a receipt for that and make that as a deduction, and you can deduct that as well. The other thing you can deduct is when you are ready and you get all your paperwork together and you go see a tax professional or a CPA, the amount that you pay your tax preparer or your CPA is deductible under legal and professional fees. So that was a quick rundown of most of the items that you can deduct for your business. Did I make you more confused or was it helpful? Listen, taxes do not have to be something that scares you. It's something you just have to be prepared for. I think it's better if you start getting your paperwork in order and do it all year long. You can even put all of your receipts into a folder and once a month put everything where it's supposed to go so you can keep track and you're not freaking out at the end of the year, because that's the worst thing that you can do. Well, not filing your taxes is probably the worst thing you could do, so don't be that guy. Now, I am happy to do a follow-up video for anything that was confusing or other questions that you may have. I'm more than happy to discuss them with you and do a follow-up video. So just leave your comments below and we can touch base and help you get through this tax season. It's not bad. You're gonna make it. It's okay. So if there's anything that I can clarify or help you with further or try to get answers for you on specific questions, I am more than happy to try to do that. But I hope this video was helpful in getting you started and figuring out what exactly you can deduct for your reselling business and how to get started getting your paperwork together. If you aren't subscribed yet, make sure you hit that subscribe button. And if you want to be notified the next time I give another video, hit the bell notification and YouTube will let you know. Until next time, I'm Angie. Have a blessed day. Bye.